Candlesticks: time, price, structure, bid, ask. Now, for you to understand the candlestick pattern so that you can actually predict or get the best accurate sniper entries for you to buy. Now, this lesson is not going to be a full lesson, but a short lesson to actually make sure that you understand what is happening before you actually start using candlestick pattern. Because like it or not, you will need to use candlestick pattern. Reason why, if you are going to be learning structure, where to buy, where to sell, you will be actually learning a general or piece of the pie. So for you to get the full picture or get the full pie, you need to actually understand the candlestick pattern that you should actually be looking for in order for you to actually get an entry. Remember, candlestick pattern are a combination, so it's going to be tricky for you since maybe you're new or you've been there. It's going to be very difficult for you to actually maneuver through that. But worry not, this lesson is for you to actually understand with simplicity. Now, let's actually understand the candlesticks in the marketplace. They are created by this price, right? This is another lesson. This is another actually lesson that I did. So if you have not watched this lesson of the candlesticks, please go and watch it. So I want to explain what's happening here so that we both understand what's happening. So this line, which is the red line, this is the line for ask. Ask simply means that it's a line for buying, all right? Where buyers are willing to buy. Now, when we're looking at another line here, which is the blue line here, which is the bid, okay? The bid is the line for sell. Now, in between these two lines, okay? Between these two lines, which is the red and blue, or red and green, we have a spread, right? We understand, which is simple. Now, this candlestick, which is painted in red, this is a candlestick. You see it's going down. This candlestick that is painted in red is a candlestick for sell. And the reason why it's actually painted in red is because of this dot line of an ask, right? Now, this line is actually coloring the candlestick to be red. Reason being, it is because this red, it's in red color, meaning that we are going down. Now, when we're actually buying or selling, let's say right now we place a buy here, we went with the buy here. If we went with the buy here or we went with the sell, remember, when we take profit, this line of a bid or for sell, actually, let me just put it in this way. If right now we place a buy here, our TP is at this price, all right? This line, which is the green line, must actually come to actually take the profit, right? Must come to take the profit. But then with the stop loss, it's an other way around, okay? All right, since now we understand that one, let's move along. It's the same, it's the opposite for the sell. Now, let's look in terms of the candlestick pattern so that we understand. Remember I mentioned that we have what? We have time. We also have what? We have price. We also have what? We have the structure. All right, so time, we're looking at what? Time frame. Okay, we're looking at time frame, and price, we're looking at open and close, right? And then structure, we're looking at what? We're looking at the volume, which we're talking about the body of this candlestick, right? At the volume. Now, this candlestick, it's a candlestick for sell because it's red. Now, this candlestick is candlestick for what? For buy because it is actually green or blue. Now, candlestick pattern, we're looking for a behavior that is actually happening in the market. Before we actually dive into behavior, I want to mention something to you so that you can actually get to understand what's happening. Now, when we're trading, we have so many parties or players, or let's just mention them. We have banks, right? We have banks here. We have investment banks, under banks, central banks. We have so many under banks, right? Now, when we move to another party, we have institutions. Institutions, we're talking about investors, those who have hedge funds, who are actually operating businesses, hedge funds, corporation business. They're actually operating business, these ones, right? So now, after having the hedge funds, we also have what? We also have brokers. Okay, but remember, there are many parties. Some of them I might not actually mention them here, but there are many parties involved in this actually instant. So now, when it comes to actually trading, remember, trading here on this candlestick pattern, for you to find the snapper entries, for you to actually find the sell here, and also find the buy at this level. What you need is that these players or these banks that are involved, or these traders that are involved in this marketplace. Remember, the marketplace is actually at large. So what they do is that we have combinations, and these combinations, they actually in many format. Reason why, just take it in this way: when you're actually playing a soccer, you will have actually a setup or a strategy for actually, maybe it's defending, or maybe it's actually wants to have a strike more. I'm not an expert in football, but sometimes we have a 4-2-3-1. That's what I know, and we have 4-3-3, and sometimes it can go to 5-3-1 somewhere there. But anyway, this is how the format is, and this is actually forming a combination of a striking, defending, or defensive, or midfield. So there are many strategies that actually can use in terms of the candlestick pattern. Now, when we're looking at candlestick pattern, remember, this is not a football, but it's the same as football. It's like when you're playing chess, it's like actually any game that we can actually relate into, that we have strategies. And these strategies, I'm actually referring to the entry of the candlestick pattern for you to actually find the snapper entries. The candlestick pattern, they can be in 1, they can be in 2, they can be in 3, they can be in 4, they can be in 5, they can be in 6. Okay, they can be in 6. So if right now they can be in 6, they can be in 7, they can be in 8, they can be in 9, they can be at 10. All right, as far as from 4 to 10, this is something that will confuse you more. Reason being, it is because for myself, I understand the complexity or the logic that is actually fundamental to forming this combination. Now, this combination, they are just 4 like that, they're just 10 like this. However, they can be more than. Why I am saying this? It is because these players, they have what I called their own entry confirmation, meaning that bank A works with bank B. All right, bank A will actually signal that we're actually having a buy, meaning that they will create an order of a buy, right, with a certain entry of a candlestick pattern. And bank B will see that and create another order, meaning that these ones, remember, when we are trading, we see trading in different ways, right? We see trading in different ways. You are, as a trader, as traders, we see trading or forex trading as a profit making machine. So we are looking to make profit with trading. However, with the banks, they are looking to actually create what? Create a business that is actually going to take place in between. So meaning that whatever that they want to profit, they are actually managing risk. So meaning that while they are managing risk, they buy here, they sell here. Bank B will sell here because they have orders. Let's take it in this way. If right now we have actually a farmer A, right? We have a farmer A and you have a person B. Farmer A is selling what? Tomatoes, selling apples, selling product, maybe let's say the nuts or anything that we can think of. Now, person B, who is actually going to sell from A to B, these two individuals or these two companies, they are actually going to create a business. While they are creating a business, they have a contract, meaning that they have an agreement between the two of them to sell whatever price that they want to sell this product. So let's say farmer A is selling the product to B, so with 10 rand. Now, these two, they have an agreement, right? They have an agreement that, okay, I'm gonna sell it at 10 rand. Now, while they're selling you at the 10 rand, B buys this product. Now, once B buys this product, he's gonna sell it at 15 rand, right? To actually profit, or let's say $15 or $10. All right. Now, why it is actually like this? These two, they have created a business, but this business is actually a risk-free. Why? It is because farmer A already knows that point individual B will buy. They have a contract. So whatever product they produce here is already a product that is actually going to be paid. Now, on number B is actually now what? Now actually number B can work still with A. So meaning that these two, they can work together to actually what? Have a, we can call this one, they are what? Hedging their position. Now, point C, which is person C, is the one that is going to actually buy this product. But this person C is actually looking to what? Looking to make or take the product. B is looking to actually what? Make profit from C. A is looking to what? Have an agreement so that whatever risk, actually it's about risk management. Right. Now, back to this portion of the banks. The banks, they see the market as a risk management. Institutions, they see the market as a portfolio management, investments, loans, and all that. Okay, so whenever they're going to enter and give an entry here of a candlestick pattern, they're going to use a combination so that they can actually signal that we are actually buying because of the contract that they have. So if one party is having another contract with another party, these two parties, they're going to conduct business. So now, looking at the candlestick pattern, there are many. Okay, since I've mentioned we have one, so we can actually have what? A hammer, and then that's a hammer candlestick pattern with no rejection on top, with a rejection at below. And then we have what? We have two candlesticks, which we actually have what? Engulfing, just like this, engulfing the previous candlestick of a star. So if right now, this is a candlestick of a star, and then this is a candlestick of a buy. Okay? And then this is the candlestick of a buy because we are at the down level, so we are expecting to go up. If right now this is an opposite, it's gonna be like this. Okay, now when it is actually like that, we have also the engulfing can be in the opposite direction. So let me just put them nicely for you to see. There will be like this for sell. So meaning that this one candlestick will be for sell and this candlestick will be for buy. So this one engulfs this one, right? That's the combination, and that is the simplest combination that you can have. This is number 2. Number 3, we have what we call a morning star, just like this. So this candlestick will be of a buy, this candlestick will be of a sell or a buy, and this one will be of a sell, signaling what? Signaling a sell entry. It can be the both way, it can be opposite, meaning that it can be actually printing the other way around, meaning that it can be an evening star, just like this. So basically, this one is actually engulfing. So you see now we're coming from the engulfing to actually this one. So once we actually have this one here, it will close as a buy. So meaning that it will be signaling what? A buy. This is number 3. Number 4, it's actually an entry combination that it is actually comprising of this 1, 2, and the 3. However, remember, the candlestick, you will not find them just like this. They are under a structure. They are under a structure, and that structure is actually a structure that is actually going to facilitate or show the banks, bank A to bank B, of the signal, whether it's correct and whether it's actually not correct. So whenever we're looking for this, for the entry pattern, which is the candlestick pattern, we're looking for this. Now, once we have these ones, we also need to understand that this only is just the beginning. There are many combinations under the number 2. Number 2 can create a small number 1, 2, 3, 4, and up to 10, right? Depending who is actually going to get in the market, who is actually playing that time. who is actually going to be there at that time. So if we had the capability to move the market, we were going to do that. So the market or the graph, it's actually moved or shifted by because of where the liquidity is more and where the liquidity is actually less. Liquidity, we're talking about the flow of cash. If right now this graph or this chart, you see it going down like this, that simply means that the flow of cash is or cash. The reason why I mentioned cash, it is because actually referring to us trading USD ZAR, but that doesn't necessarily mean that when the graph goes up, the flow of cash is bad. No, that's just only a big factor that is actually we see, or we, if you do not see it or you never you don't understand it, that's the big factor that is actually affecting that. But that's not the case. The graph or the chart, if you see it going down like this, it's measuring the performance of a country, the economy, the GDP, and everything that is actually involved. So if you see now it is actually going down like this, remember this graph is actually it is derived from what's happening in the economy, in our economy. It doesn't matter which country you are from. So that's actually what's happening here. So with that being said, I love you all, and I will see you on another lesson. Subscribe, like, comment, share the videos with others, and I love you all. Stay tuned.